Okay, welcome back. Just 2 minutes to go for the pre-open session. Ashish Chaturmoda of JM Financial is with us to run us through what he's making of the market from a futures and options perspective and some trades that he'd want you to take. Ashish, good morning. Good to have you with us here. I mean, the market goes on to the 18K mount, but what beyond that? And here, where do you see entry opportunities to make money?
Hi, good morning, Prashant. So, we have been mentioning about 18,100 and 18,400 in our last calls, and we believe that the trend is very promising considering the kind of, move we are witnessing in entire banking and financials, which contributes close to 30 to 35% of the index contribution. And now we are also seeing a bottoming out process happening in the IT space, which has good 13 to 14% weight in the index. Apart from that, the entire capex theme is also showing a very strong trend, supporting the manufacturing-led, stock contribution. So all put together, I think this is giving a lot of strength to the market. If you look at the shorter-term data points in the yesterday's price action, in the data point, even at 17,900, we have witnessed huge put writing happening. So that gives us a sense that in the immediate short term, 17,900 and 17,800 itself is going to act as a strong support zone for the market. And going forward, I think the next leg could lead for a move towards 18,400 to 18,500 kind of trajectory. In terms of individual stock picks, my first stock pick would be Adani Ports, which we indicated last week also. The stock has hit a fresh all-time high after consolidating for good 18 months. And here we have witnessed a strong buildup of long positions. So I think Adani Ports could be initiated as a long, keep 9, 10 as in trading stop loss. We expect the stock to hit 1,000 levels in an immediate short-term basis, but positionally looks good for even 1,100 kind of trajectory in next couple of months. As we mentioned, banking is showing very strong traction. So Axis Bank is one stock which is gaining traction. In the last week, we have seen a considerable OI build-up into the stock. So one can initiate a long, keep 785 as a trading stop loss. 850 in the immediate short term is going to be the target for Axis Bank. And again, in terms of valuation, stock is at significant discount to its peers, whether it's ICICI, HDFC, and Kotak. And the way we expect the loan growth to go towards 16 to 17% in the next 2 years CAGR basis, this is going to entirely benefit the overall private sector banking basket. We are also positive on the QSR theme, and within that, I think Jubilant Food is gaining a lot of traction. Stock has been consolidating for last couple of months, and now we see some signs of a recovery coming into the stock. So if one can initiate a long, keep 610 as a trading stop loss. In the immediate short term, 660, 670 is a target we are looking in Jubilant Food. And last but not the least is the entire specialty chemical space, and particularly the fluorine-based players, whether it's SRF, Gujarat Fluoro, or Navin Fluorine. So within that, we are liking SRF because company is in its last meeting has indicated a 15,000 crore capex in the next 5 years. And out of that 15,000 crores, 12,500 is going to be purely into specialty chemical. So company intends to grow the entire specialty chemical business by 20% CAGR in the next 5 years. And that's where I think the trend is getting established into SRF's chart as well. Stock has been consolidating for 6 months, and now a fresh breakout has happened into the stock. So one can initiate a long at with 2680 as a trading stop loss. On upside, 2850 is a shorter term target, but eventually we are looking for a 3,000 kind of levels in next couple of weeks in SRF.
Okay, Ashish, thanks a lot for those calls. By the way, just want to highlight that point that Nimesh was making on the execution of that block is going to be important on HDFC Live. Now it's happened on the BSE special window, the block window, because over the last few days, some blocks, there's been a lot of leakage and slippage, right? So it's not gone to the intended parties. What's happened here and why it's showing you up in pre-open is because the block has happened in one go at 574 rupees or so on the BSE. 4.3 crore shares is the volume on the BSE in that special window. So that makes it, something which should help, the stock price because there's no leakage. So that would help. Of course, some of the pre-opening rates are also kicking in, and we'll address them. Deepan, just a word on this one, Adani Ports. That started to participate now. Any views here?
Yeah, no really view on Adani Ports per se. Although it's a great company and has made considerable progress, good track record, but valuations are on the higher side. Maybe they reflect scarcity of the underlying stock. But at this price point, I think it doesn't make investment sense to invest in Adani Ports, although existing investors can continue to ride the upward movement.
Well, Dipan, have a great day. Thanks a lot for joining in. This is, of course, going to be 18,000 on the Nifty this morning. And this is the first time that we're back to 18,000 since the first week of April. So reclaiming a lot of, important levels on the upside this market. It's led by Infosys, Tech Mahindra, ICICI Bank, SBI. Banks have really powered through in the last fortnight or so. ICICI Bank, SBI topping the charts this morning yet again. And some of the FMCG names, Tata Consumers, Titan, etc. are doing pretty well. M&M also is trending, continues to trend higher as the company has once again announced their SUV electric vehicle plans at the Analyst Day that took place a couple of days ago. But let's talk a little bit about the defense space. We have Harshit Kapadia, who's joining in now to give us his view. He's the Vice President, Industrials, Consumer Durables and Electricals and Renewables at Elara Capital. But today we've called him particularly to talk about the big surge that we've seen in the defense stocks. Harshit, good morning and thanks for joining in. The government is doing a lot to push defense indigenization, localization of production, etc. And we have seen these stocks have a terrific time. So very quickly before the market opens, if you can just summarize for us, what are the top stocks that you're looking at and which are the companies that could be big beneficiaries of the government push?
Good morning, Sonia. So in terms of top picks, on the large cap side, we prefer Hindustan Aeronautics because there could be much more surprise in terms of export is what we see apart from the indigenization. On the small and mid caps, we like GRSC and Bharat Dynamics is what we look at. With the story as far as there is a two-way one can look at it. Indigenization both in terms of defense PSUs and small and mid cap defense private companies looks to be the biggest beneficiary when it comes to indigenization. The surprise element could be in terms of defense export because government is pushing a lot in terms of exports per se.
Harshit, hi, good morning. I think there was a recent notice, a circular, which said that for emergency purchases up to 300 crores per order, and the deliveries have to be made within a year or so. How large is that as an opportunity? I mean, have you looked at it in any detail? What could this mean?
So when we look at the opportunity size, the overall opportunity size as far as the defense goods is concerned is close to around 9 lakh crore, but it is spanning over next 10 years. This is more on platform side that we look at. And within that, there are components and subsystem which go into it, which will largely be the mid and small cap defense private companies which we'll be looking at. And government has come up with three lists where these would be beneficiaries.
No, my point specifically was with regards to emergency purchases. These are smaller, the big numbers, of course, are longer term plans. But does this mean, have you looked at this in terms of what could be the size of the opportunity with these smaller orders coming through?
So in terms of size, in terms of smaller orders, it could be somewhere in the range of 50 to 1 lakh crore is what we are looking at. But this is largely given by the private companies on the defense side, and they are still evolving. So some of them have reached a decent size, and some are still in the startup phase where things can run up significantly.
Okay. Apart from the out-and-out defense providers, right, whether it's Hindustan Aeronautics, BEL, BML, there are some of these other companies like the ancillary companies, right? So whether it's the electronic solutions companies, something like a Data Pattern, there's MTAR Technologies, there's Astra Microwave, Taneja Aerospace. Which are the ones that have strong fundamentals and are solid balance sheets, which can be beneficiaries? So I'm trying to understand from a long-term retailer standpoint, which are the stocks?
So on the small and mid-cap side, we like Data Patterns, we like Paras Defense, we like Astra Microwave and Dynamic Technologies. Given that the product portfolio which they have, it's clearly aligned to more on indigenization, which government is trying to do. So these are the stocks that we like on this space.
So, some of these stocks like Data Patterns have already rallied about 50%, right, in the last 12 months. And they do have their own challenges like the semiconductor shortage, dependency on government orders, etc. Do you think it's still good to go for more, or would you be cautious after the run-up?
No, there is still upside left, but any meaningful downside in the stock is certainly a very good opportunity to buy, given that we are going to see an increased order inflows for these companies and the project which they have undertaken with the government is actually now coming from development mode to production mode. So we are expecting a significant inflows for some of these needs.
Okay, just one quick word on MTAR Tech, since you said that that's also your top stock. Of course, the company does a lot of work in this entire space, right? Whether it's defense, clean energy, nuclear energy, etc. But they do have some pressure on their balance sheet. Their working capital days have gone up. Promoters selling a bit of stake. So is there a bit of concern here?
There was a concern, but I think we are now relatively better off in terms of MTAR, what was there, maybe 6 months back. So right now we are seeing more things getting cleaner. They are adding more business opportunities. They recently mentioned in the call that they are looking at space as another opportunity. So they are further expanding their scope of work in each of the segments where they are operating. So there is more juice to be taken from the company.
All right, we will leave it there today. Harshit, thanks a lot for joining us. Let's talk about the market now. The pre-opening rates have settled and we will start about 18,044 on the Nifty. Now, because the market's in a winning spree, it will be interesting to see if, the algo trades just decide to take some profit here. And then we have a second leg of buying. HDFC Life is starting 4.5% higher. That really is going to be a stock of the morning because the block has been executed in just the perfect manner that you would have wanted, and that's up about 4.5%. Infosys is the other stock doing well, up 1%. Sudarshan, if we open here, do you trade the Nifty or the Bank Nifty and your 910 call?
Now buy on a significant dip in the Nifty and the Bank Nifty, but be on the long side. And Wipro is a buy with a stop under 415.
Okay, Wipro is a buy. Mitesh, your call?
Yeah, I'll go with the buy on Birlasoft. Keep a stop at 330. Look for targets of 355.
Okay, that's on Birlasoft. Let's just do one thing. Let's just revisit some of the interesting names. Before that, Nimesh is here with Standout Brokerage Report. Nimesh, tell us.
Hi, Anuj. Today's standout is in microfinance companies. Goldman Sachs has put out an interesting note. They believe that the microfinance is at an inflection point, and the best way to play this is through Bandhan Bank, IndusInd Bank, and L&T Finance. With most of this, with all the three stocks, trading at a discount of anywhere between 45 to 50% versus the 10-year averages, Goldman believes that market is not pricing in any growth or any sort of improvement in the ROAs for all these three companies. In fact, Goldman expects the second half of FY23 to be strong in terms of improving loan demand, as well as most of the provisions for bad loans are provided for, and they are behind for most of these companies. So on individual companies, to start with, on Bandhan Bank, Goldman has a buy rating with a target price of 390, and they expect Bandhan to deliver the best-in-class ROAs over the next 3 years. On IndusInd Bank, they have a buy rating with a target price of 1187, and for IndusInd Bank, Goldman expects the company to deliver PPOP growth of a 19% CAGR over the next 3 years, and with healthy ROA of 1.7% and ROE of over 15% over the next 3 years. On L&T Finance, they have a buy rating with a target price of 100. Even on L&T Finance, Goldman expects a PPOP growth of over 18% CAGR over the next 3 years, with a healthy ROE of 2.7% and maintaining an ROE of over 13%. So Goldman believes that MFI is at an inflection point, and the best way to play is through Bandhan Bank, IndusInd Bank, and L&T Finance.
All right, Nimesh, thanks very much for that. So microfinance companies in focus there. The other one is diagnostic companies, and I mean, they don't seem to be able to catch a break. This time, this Credit Suisse, which has put out a note, and they're saying, well, we are at the cusp of a storm. Ekta is here with details. Ekta.
Thanks for that. Well, yes, it is a negative report on the diagnostic industry, just, the second one in just a couple of weeks. Credit Suisse has written on the diagnostic companies. They say that the industry is at the cusp of a perfect storm. They've initiated with an underperform on Dr. Lal's with a target price of 1,400, and they've resumed an underperform on Metropolis with a target price of 1,165. According to them, there are high ROCEs, which is return on capital employed currently, which is for 40 to 50% post-tax, ex-cash, low entry barriers due to limited capital requirement. Credit Suisse expects the ROCE to settle down to around 20 to 25% by FY27, implying an EBITDA margin of 20%. EBITDA margins of Dr. Lal's and Metropolis, according to them, have already declined by 300 basis points to 23% versus pre-COVID, and they expect the margins to steadily contract by further 300 to 400 basis points by FY27.
Ekta, thanks a lot for that. Well, about 2 minutes left for markets to open. Let's just look at some more names. I think Bajaj Finserv is going ex-bonus, so that's why you're seeing that, ex-split rather. I think that is the reason that you're seeing this move. I think we'll sort that out in a bit. What else stands out? Mitesh, any word on Shree Cement? That's really been one of the stocks of this month, up 10%.
It's running away like a crazy stock. I think, it's also managed to get past the 200 average. The long-term charts have improved a lot, but I think around these levels of 25,700, 25,750, you will see a pause. In fact, the last week high was 25,550. I think around that level, you'll see a pause, some consolidation, but I think eventually the stock should be able to clear these levels and head towards 26,600. So I'm still very positive. I think any declines closer to about 23,800, 23,700 would be a good entry.
26,000 plus targets on Shree Cement. It's done well and really bottomed out on the date where the index exclusion was announced, something we have seen in the market play out many times. The first rate should be in. The Nifty will start above 18,000, 18,035 on the Nifty, 18,030, holding 18,000, 18,027. Of course, there could be some profit taking, 18,026, but still holding firm above the 18,000 mark. The Bank Nifty is opening about 150 points higher, above 40,700, and is looking quite good. In terms of individual stocks, of course, HDFC Life is your stock that is the top gainer right now. It's up about 3% or so. Then, of course, we look at some other names. Shree Cement is up about close to 2%. SBI Life is doing well in trade. Tata Consumer is doing well. The Nifty is holding 18,000, by the way. Don't lose sight of that. Adani Ports is opening higher by about 1% or so. Infosys opening higher. Hindalco, Tata Consumer, Tech Mahindra, Wipro, Tata Motors, all these stocks doing well. The top gainer still is HDFC Life. It's up close to 3%. Shree Cement is close second, up about 1.3%, and SBI Life doing well. On the way down, not too many stocks. Just Cipla is the only notable loser, down about 0.8%. But otherwise, it's really all guns blazing. And for now, holding 18,000, 18,028 to be precise right now, as far as Nifty is concerned. Sonia, over to you.
Oh, what a market, Anuj. Electrifying, right? There's no other way to put it. It's a very good opening for the mid-cap index, up 200 points. The advance decline ratio is almost 7:1 in favor of the advances. So many large caps hitting fresh highs. Ambuja Cement, Adani Ports, SBI, ICICI Bank, Apollo Tyres, M&M Financial, Naveen Fluorine, Eicher Motors, all at fresh 52-week or some of them fresh record highs even at the moment. In the broader markets, IRB Infra had some good data on toll collections, gone up 35%, so looking good. HDFC Life is up almost about 3.5% on the back of the news flow. You have something like, a lot of these metal names are moving up this morning, so do keep an eye out on them. Sugar, so Nalco is up almost 1%. Sri Renuka from the sugar space is up about 0.7%. Ujjivan Small Finance Bank is up almost 1.5%. You have Lemon Tree Hotels, Indian hotels that continue to charge ahead. Those stocks have been hitting new highs. Banks are coming back in a big way. I mean, of course, the large cap PSU banks have been doing very well, like SBI. But now in the broader markets as well, Union Bank, IDBI Bank are all seeing big moves at the moment. Even some of these auto stocks. On the downside, very few and far between really in terms of losers. Just something like a BEL that's taking a bit of profits off the table, something like a PC Jewelers, but otherwise it's a rock solid market and largely led by the financials. The Bajaj twins, Bajaj Finance is up 1.5%, SBI is up 1%, HDFC Life is up 2.5%. Of course, news flow there, Kotak Mahindra Bank, etc. are up about 0.5%. So very good market.
I mean, great opening and just a absolute flourish to 18,000 levels. So, you know, futures are at a premium and the market's up 90 points now. So it's all looking pretty good. Market breadth, of course, is also some 5:1 in favor of advances. And I think, you know, that clarity in HDFC Life, of course, is important, that there is not going to be any more sale as far as Aberdeen is concerned because of rules mandating that promoters stay above 50%. So that's 594 on HDFC Life. It's up about 3%. Deepak Fertilizer is up 3.5%. Tata Investment Corp is coming up with about a 3% gain. Ease My Trip is coming up with 2.6% gains. What else? There is Suntech, which is up 3%. Religare has been having a fantastic week, a fantastic month actually. It's up 40% this month so far, 2% on that one. eClerx is another one which is up some 4% or so. So this is early kind of first few minutes of trade. Nazara shot up yesterday. It's taking a little bit of sort of profits off. It's down 1.7, 1.8. Lal Pathlab, the diagnostic companies we highlighted, both Metropolis and Lal Pathlabs, although they're off the lows already. Astral is down a little bit and so on and so forth. Nothing really with momentum or volumes on the way down. I mean, 86, 87 points, 18,000 being kind of held. And it's a good-looking screen overall that we have at this new start. Sandeep Bhatia is our market master of the day. He's head of equity and country head India at Macquarie Group. He's joining us right now to take some questions. Sandeep, great to have you with us here. Thank you very much, Prashant, this side. So, I mean, back at 18,000, Sandeep, I guess we got to begin there. But let me ask you, where do we go from here, in your opinion?
Yeah, we have a Diwali which has come a month early, maybe. So good to see that in the markets. But I think we will probably go into the third quarter of the financial year or the fourth quarter of this calendar year quite strong. This market has legs to it, essentially around the fact that the worst of the commodity spike that we saw in the first 6 months of the year is now behind us. And to some extent, the only disappointment has been a sort of weak monsoon. Broader industrial production consumption trends are still holding up. And to that extent, this market would probably see another 8 to 10% kind of rise in the next 3 to 4 months. But then that should peak out. I think coming in the first quarter of next year, I think with the budget around the corner, there would be profit taking.
Okay, there will be profit taking. IT is beginning to make another move now, by the way. And just keep an eye on Bharti Airtel. It's about to negate a major double top at 780. 780 is where it's topped out 2 times. I mean, if it were to take out it this time, then things could get really interesting. Sandeep, hi, good morning. What's the verdict on large cap IT names? Because in the market's now expecting maybe another buyback from Infosys. We've seen a bit of a rally back again in NASDAQ. That's also helping. But this remains the only pocket which is still technically in a bear market compared to the rest of the market.
We like the IT sector. We like HCL Tech. We like TCS. We like Infosys. So we definitely like that. Our call here is that we will continue to see, a decent earnings growth come through. 10 to 12% kind of earnings growth. A lot of negativity still around the sector. We are seeing a lot of pushback, but the US will not have as big and deeper recession as we have seen in the previous cycles. So to that extent, the IT sector will actually offers very good value at current levels.
Okay, the IT sector offers very good value. That's interesting. So you're not concerned, Sandeep, good morning. You're not concerned about, problems like not just the US recession, but the companies themselves are seeing margins at multi-quarter lows. I think the lowest in 10, 11, 12 quarters for the larger guys, right? Like an Infosys and HCL Tech. You're not worried about more operational pressure through the course of the recession?
Well, I think you just outlined all the pressures which are there in the price. So now the question is whether you keep chasing the stocks which have already doubled and more in the next 6 months, or you look at some value here. That's why I phrased it with some value. So I think definitely there could be some negative news still in the US, but we don't see the kind of big layoffs or any of that kind of 2008 kind of cycles or previous cycles that we saw. I don't think that the economy, at least in the US, will take such a big hit. If you have to ask me, the real challenge will be in Europe, not as much in the US. And at least on the entire balance between valuations, earnings growth, IT sector actually stands out.
Okay, so the IT sector stands out. I wanted your thoughts on what's happening in one of the other consumption piece, which is autos, right? Companies like M&M are making big investments in the electric vehicle space. It's a big bet, considering that there are many challenges there. They're investing 9,000, 10,000 crores over the next couple of years. Is this a space that you want to bet on? Not just the traditional IC engine guys, but even the electric vehicle players. And how else would you look to capitalize on the growth in the auto space?
You have asked me this question a couple of times before. So yes, I think the auto and the entire electric vehicle space is definitely worth looking at. I would still go with the large players, which are essentially Maruti, Tata Motors, and Mahindra's. Mahindra has been a standout, I think, essentially because its product cycle has surprised both in terms of the consumer response and the fact that the slew of products that have been launched have clearly upped the game in terms of the product quality that M&M used to come out with. So that's definitely a dark horse in the entire auto sector space, and I would continue to bet on that. I would also expect that entire EV to be led by essentially Tata Motors and Mahindra's over the next couple of years.
Sandeep, defense as a space, I don't know if you have formal coverage, but...
We don't, unfortunately, as such.
Do you get clients asking you about the space, asking you to initiate coverage, wanting to know more?
We see a lot of interest there, but it's a big project and a bit subject to lots of issues in terms of ordering and delivery schedules and so on. Impossible to predict. Actually, it's too much project based and definitely government policy based.
It's very lumpy. Yeah, it's very lumpy.
Yes, it's very lumpy. It's impossible to predict. Structurally, we know we are going in the direction of Make in India. And at least on the defense front, some major platforms will definitely see Indian corporate sectors come in and start contributing to that. But if you want to look at it, given the entire cycle of defense purchases in India, these will take at least 5+ years, if not more. It's good to know. It's good to have an eye on. I don't think you can deploy big sums of money or build any kind of big earnings projections, which can be valid and credible, at least in the next 2 to 3 years.
Stocks have done very well, though, right? I mean, I think that generates a lot of interest as well. But there seems to be, again, I mean, it's such a large, huge sector, and it's very lumpy, very large platform, project-based. But there seems to be, the direction seems to be make here and buy here locally rather than import, right? So import substitution is the big theme. That seems to be the general direction. Now, as you say, can one really take meaningful exposure here? One is not very sure. You wouldn't want to do that at this stage, Sandeep, is what you're saying, right?
We don't want to do that. I would be happy if the capex cycle as a broader thing turns around for India. That we have waited for a decade, and maybe it's still it's started happening, but it will still take some time, a year plus, for it to pick up. Defense is even longer. Yeah, and it's the first time ever if that happens. Impossible. I think actually the market also doesn't have the information and the background for these things. It's just going on a thematic basis.
Okay. Well, just look at the market. It's really been such a roaring market. I mean, there's absolutely no sign of any profit taking. In fact, the Nifty is now building on further. 18,041 is what you have. The mid-cap market, of course, has been doing rather well. And just look at cement stocks once again. Shree Cement is up another 2.3%. Look at ACC and Ambuja. A lot of people thought maybe after that open offer is over, the stocks will fall. Even Ambuja went into ban. And look at how these stocks have rallied. Sandeep, this has been a stunning rally. Of course, ACC and Ambuja have the Adani factor, but the other stocks as well have rallied. Do you like anything at these levels in the cement space?
We like Ultratech as such. That's what we like. We like Dalmia Bharat. So these are some of the names that we like. That's where we are positioned.
Okay, but nothing in the broader cement space, in the broader market, in the mid caps and small caps, because that's where at least there's some valuation comfort. The large cap cement stocks are now way above their median valuations.
No, that's primarily where we are positioned in the larger cap stocks.
For the market itself now, I mean, as Anuj was pointing out, it is not stopping at all. Just look at some of these names, right? Even in the broader markets, of course, the limelight is taken by the large caps today. There's no two ways about that. But even in the broader markets, names like, something like a Zomato is now coming back, Lemon Tree Hotels, you have something like an IDBI Bank, Crompton Consumer, Specialty Chemicals is coming back in a big way. So keep an eye out on that pocket as well. Sandeep, we were talking about the corporate profit to GDP ratio, which has improved drastically for India. It's now at a decade high at about 4.3%. A lot of brokerages have gone ahead and raised their full year Nifty EPS targets as well for FY23 and FY24. Would you do the same? And if yes, what would the growth look like?
So we don't have a published Nifty target. Most analysts actually end up cutting it. I think growth for India would be in the region of 16% plus for the current year. The real challenge for pricing EPS growth will be next year. Most people assume that India's GDP growth would be much lower. My own view is that India is in a good earnings growth cycle for the next 2 years. We will definitely see high teens growth of 14 to 18% for the next couple of years. But the real challenge will be for next year. And that's something which we will have to monitor. At least in the current phase that we see, as I said, market will run its course till the end of this year. And the real challenge will be how top line and earnings shape up for the next financial year.
Sandeep, do you have coverage on hospital names? That's a theme we're going to discuss in a little bit from now. We've got a management of a hospital chain joining us, but anything you like there?
Hospital names are definitely interesting. My own personal view is that we will definitely see India come through much more strongly in the entire medical space, and Apollo Hospitals is one such play. Per se, I think it's still a space which is still nascent, and it would benefit from kind of longer stable earnings growth, which many of these companies have had episodes of earnings growth coming off. So we'll have to wait and see the credibility of earnings come through for the entire space.
Now, Sandeep, since you do talk to a lot of FIIs, what's led to this sentiment change, and what kind of money is our market attracting? This $6 billion plus that we have seen in last 1 month, is it India dedicated money? Is it ETF money chasing momentum? Any thoughts?
So I would characterize this money as giving up on India correction money. So a lot of people took money off the table thinking that India would correct in April, May, June. I think people have given up on that, and some of that money is coming back. I wouldn't think that there's major money which is coming from other markets such as China, because those markets are seeing significant negative flows, and the Indian market doesn't have the ability to take such kind of inflows if money is coming out of China and pours into India in a big way. But it's mostly India focused or EM weightage benchmark money for India, which was waiting at the sidelines and is now coming back. The real challenge for all foreign investors is to see whether India will continue to buck the trend. I think what's happened also is the fact that we probably came into a fantastic geopolitical strategic space, which the market has benefited from in the last couple of months. And we'll have to wait and see whether that kind of sweet spot which India finds itself in continues, and we see the widening of earnings growth, which this market has clearly lacked for a long time. And that's the real challenge for next year. So this year is mostly done. and we will be on this phase, especially because the worst of the commodity prices are over, and the challenge will be for the next 12 months.
All right, Sandeep, we will leave it at that. Thanks a lot for joining in. It's a good day, an auspicious day. We've gotten back to that 18,000 mark on the Nifty for the first time since April this year, and there's plenty of momentum kicking through in the broader markets as well. The Bajaj twins are on absolute fire this morning. Bajaj Finserv is up 5%. It hasn't done much this year, actually. It's up just about 10% this year, but now it's starting to perform. The entire financial space has been ablaze, not just the core banks. You have NBFCs and now life insurance. I mean, look at HDFC Life and SBI Life. They're the big movers this morning. But let's take a breather from tracking the markets minute by minute and look at the hospital space. In FY19, hospitals saw the highest amount of deals struck in the last 5 years, with M&A worth rupees 7,600 crores, after which the hospital's M&A saw a hiatus due to COVID-19. But it seems now as though acquisitions in the space seem to be ramping up yet again. 3 deals worth a total over 700 crores were struck in a span of less than a month. Ekta is standing by the wall to tell us more. Ekta.
Thanks for that. Well, the largest of the 3 deals in the past few weeks was Apollo Hospitals acquiring a hospital bed in Gurugram for around 450 crores, followed by Krishna Institute of Medical Sciences, or KIMS, acquiring majority stake in over 300-bed multi-speciality hospital in Nagpur for around 80 crores. Lastly, the third acquisition was Narayana Health shelling out around 200 crores for an orthopedic hospital, Shiva and Shiva Orthopedics, in their home market of Bengaluru. Now, while Apollo Hospitals acquisition marked the company's entry into Haryana, the KIMS acquisition was to diversify away from Telangana and AP and Andhra Pradesh. Meanwhile, the focus of Narayana's acquisition, which is housed within this company's city campus that comprises of the Cardiac Sciences Hospital and their multi-speciality hospital, Mazumdar Shaw Medical Center, was to strengthen their offerings in the orthopedic, neurology and trauma department. So why has M&A picked up in the healthcare space? From a seller's perspective, a few reasons are driving sales, such as existing promoters or investors of standalone operations looking to cash out. Reasons range from a lack of an exit for investors, as many of the hospitals are too small to list, too inefficient to manage, or too insufficient in terms of volumes, as there is a movement of patients towards more multi-speciality larger chains. Now, from a buyer's perspective, acquisition targets are mainly 150 to 200 bed hospitals or larger. Hospitals have seen business pick up post-COVID-19, with domestic growth estimated to be around 10 to 15% in the next 5 years. And lastly, medical tourism. It's becoming a big growth driver. In fact, the likes of Shalby is looking at a 150 to 200 crore sized acquisition of multi-speciality hospitals in Delhi and Kolkata to cash in on medical tourism from Nepal and Bangladesh. Estimates suggest medical tourism could see a growth of anywhere between 18 to 20% over the next 5 years. Lastly, in the past few years, the return on capital employed of hospitals has risen from single digits in 2015 to 2018 period to around 10 to 20% currently. Recently, increasing risk appetite for acquisitions is indicative in the return on capital employed increasing. But why not fresh capex? Experts say it's easier to acquire a greenfield hospital. It takes 3 to 4 years to come on stream and longer to even break even. An acquisition, as described by one of the hospital chains, is a plug and play model. Find a strategic fit and buy it.
Okay, thanks a lot for that. So let's see. This space, as Ekta was saying, medical tourism has come back in a big way. So that's perhaps beneficial for the hospital sector. Ashutosh Raghuvanshi, the MD and CEO at Fortis Healthcare, joins us now to give us his views. Ashutosh, plenty of questions for you. But first, just to start off, are you seeing a big pickup in terms of medical tourism? And overall, how much has the business picked up post-COVID?
Yes, so medical tourism has been improving quarter on quarter as the relaxation happens in the traveling conditions. It has come back to pre-pandemic levels, and we are seeing a growth from there as well. Recently, there's been a big thrust from the government also in their new program, which they are calling Heal in India. So I think a portal has been created, which is a very good effort, first effort, I would say, where some degree of regulation in this space is coming in. in terms of the interpreters and other facilitators, how they would be accredited and how that space would be monitored by the regulators. So that is a very welcome step, and I think that will increase transparency, and we should expect a phenomenal growth in international business in next few years.
That's interesting. Now, Mr. Raghuvanshi, hi, good morning. Does this mean that sort of international patients who come to India to get themselves treated have to take that route, or is that an additional sort of route that they can take? And what would this mean? I mean, how would this change your international patient volume for the industry, not just for you?
Yes, so it is essentially an optional thing at the moment. It is not the only route. Patients can come through any other route as well. But this is one route which is going to be very transparent, because both the government, the payer, everybody will be able to monitor this on the portal. It's a very well done portal, and all the industry stakeholders have been sort of involved in the suggestions they have given to evolve this portal. So that definitely is going to be only one of the routes which will provide more transparency and make it easier for the patients to come in. But that definitely is not going to be the only route.
Okay. Mr. Raghuvanshi, I'll come back to the business in a bit, but lest we run short of time, I just wanted to ask you what's happening with the open offer, potential open offer by IHH. The hearing was expected to be concluded by August. Can you give us some kind of a timeline on when it is scheduled for?
Yes, so the hearing was actually completed last year. So we have been waiting anxiously, but we hear that the judgment is imminent at any time. Within this month is what we are hearing from our lawyers. So we are just keeping our fingers crossed that it should happen this week or the following week.
Okay, so it's just around the corner. You're saying within this week and this month, right? Within the month of September. So for IHH is not rethinking their stake in Fortis, right?
Absolutely not. IHH is absolutely committed to Fortis and India as a market, and they have repeatedly stated that Fortis is going to be the main vehicle for expansion. And as Ekta was reporting earlier, the space is very, very attractive. Today, our metrics are very good, and we are in a position to go for massive expansion, and we would be looking at potential targets to acquire as well. So definitely IHH is absolutely committed to Fortis and the Indian market, and we are looking forward to having this legal thing behind us very soon, and then we are looking at accelerated growth.
Mr. Raghuvanshi, though, we've been waiting for this judgment for a while now, right? I mean, I remember last time you were on the program, at that point also, naturally, I mean, these things are not up to you. It was, I mean, I think you described the judgment as being imminent. That round the corner, but we've not heard anything yet. Are you? I mean, your lawyers are telling you that this is it now, that it'll come through this month, or is this just a hope?
No, Prashant, there are several reasons why we are hopeful that this is going to happen rather quickly, because there was a mention made by another party in the case. And at that time, the judge had commented that just wait for 2 weeks and this matter should be concluded. Also, one of the judges on the bench is likely to retire at the end of this month. Usually, the convention is that before that, the judgments are usually given.
Yes.
So has this, I mean, it's still been an inordinate delay, right? Has it impacted your capex or your expansion plans in any way? And what do the plans stand at currently?
So internal expansion did not get affected. In fact, our debt leverage position is very good. Our debt levels are only at net debt at the company level is only about approximately 500 crores. We have been able to add almost 350 beds. We have made an investment of about 650 crores in the last 3 years. So some of those initiatives have not been a constraint because of this. Operationally, we are fine. But as I was saying that, in the merger and acquisition area, we cannot think of because of that would require an external funding.
Okay, got that. So can you tell us a little more about what the plans of Fortis are? Since you're going big on CapEx, IHH will be on board very soon. Moving forward, any kind of acquisitions that you'll be looking at in the hospital space, will you go through the inorganic route? If yes, any timelines that you can share with us?
So obviously that is opportunistic, so it will be difficult to comment on specifics. But what I can share is that we have a good brownfield expansion plan where we are adding almost 25% further capacity. That will be about 1,500 to 1,700 beds in brownfield expansion. Plus, and all that for that funds are tied up. So beyond that, we have the capacity to do further mergers, but we would go strategically first in the areas where we already have our presence. And then secondly, if there are any opportunities where a preformed cluster in an attractive location and at an attractive valuation is available.
Any particular specialization, any areas you'd like to cover with these, what you described as opportunistic acquisitions?
Yes, so not specifically a particular medical specialty, but the size of the hospitals, we are looking at 200 bed plus, and certainly it will be preferable if it is within the clusters where we are already present, or at least there should be a strategic fit with the existing operations.
Okay. All right. Mr. Raghuvanshi, we'll leave it at that. Thanks a lot for joining in and all the best with the open offer completion. You said that by the end of September, the deal with IHH, the open offer is expected to go through. It hasn't hampered their capex plans at all, this inordinate delay, but this, of course, will be a positive. And medical tourism has also picked up now with things opening up. Okay, let's slip into a quick break on that note. Up next, Arvind Subramanian of Mahindra Life Spaces will join in. This entire space has been on a tear lately. More on their business outlook going forward. We'll also connect with Sanjeev Singhal of Mazgaon Dock Shipbuilders to talk about an outlook on FY23. Stay tuned.